In 2022, many investors faced big challenges as stocks, bonds, and even cryptocurrencies experienced a decline. Robert Kiyosaki, the author of Rich Dad, Poor Dad, has voiced concerns that the world is on the cusp of one of the greatest financial collapses since World War II. Kiyosaki warns us about the fact that blind faith in banks as completely secure institutions is a thing of the past. In today's financial world, even our most dependable financial institutions grapple with uncertainties. Kiyosaki's words serve as a wake-up call, helping us realize the importance of gaining a deep understanding of financial complexities as a defense against the upcoming challenges. In today's world, there are concerns about the safety of our banking systems, and here's why. Fragile financial systems. Just like dominoes, some big banks have been facing problems. This happened very quickly, even faster than the 2008 financial crisis. These issues show that something is not right with how money works. The government can create a lot of money, and banks are lending more money than they actually have. When these banks start falling apart, it reveals how unstable the whole banking system is. The big banks. There are 5 or 6 huge banks that are so massive that they're considered too big to fail. This means that if they run into trouble, the government steps in to help them out. But the smaller banks, which are the majority, won't get the same treatment. If they have problems, they may use the money you deposited into the bank to cover their losses. In essence, the money you put into the bank doesn't entirely belong to you. You become a creditor to the bank. Our money isn't firmly backed. Unlike in the past, our money today isn't backed by something valuable like gold. It relies on the government's promise. Recent changes in banking, like the Bank Term Funding Program and relaxed insurance rules, have made people worry about how much the government interferes with our money. These changes also remove some protections that are supposed to prevent another financial disaster. Impact on everyone. When the government prints more money, it can lead to higher prices for the things we buy, which can hurt our wallets. In the past, the financial crisis of 2008 happened because of risky mortgages. But today's troubles are different. Smaller banks got into trouble by lending money for a long time and needing more money when things got tough. This made people scared, and they started taking their money out of the banks, which made the banks even weaker. This all shows us the importance of understanding how money and banks work, as told by Robert Kiyosaki. His message is a call to action, urging us to be knowledgeable about financial crises and to be prepared for the unexpected consequences. It's a reminder that in uncertain times, having financial knowledge can be a lifeline. Take it as a warning or a lesson. It depends upon you. Robert Kiyosaki is not echoing the same old ideas. He's offering a fresh perspective on money. And who does he point the finger at for the issues we're facing? It's the U.S. Central Bank, also known as the Federal Reserve, Fed. He sees them both as the source of the problem and a potential solution. But there's more. Kiyosaki is raising a red flag about the bond market going haywire. And that's concerning news for our retirement savings and pension plans. Even though some experts claim our money is safe, Kiyosaki isn't convinced. He's sounding the alarm about an impending crash and the beginning of chaos. Kiyosaki is short in challenging us to break free from our usual way of thinking about money. He's encouraging us to step off the beaten path and explore new possibilities. Let's get deeper into this story. Government also has a role to play in these financial crises. They borrow money from banks to fund various projects and public services. But when banks are in a tough spot, they may become less willing to lend money to governments, or they might do it at a high cost. This can make it expensive for governments to borrow the funds they need. Now, if your money is in a regional bank like Bank of Hawaii or the Pacific Western Bank, and these are considered regional banks, your savings could end up being used to bail out the bank instead of relying on taxpayers' money. Is that correct? Yes, you're absolutely correct. This process is known as bail-in instead of bail-out. It's similar to what happened in Cyprus, where money from depositors was used to cover losses and make everyone whole in a fair manner. When governments have to spend more to borrow money, they might tighten their budget belts, affecting essential services like healthcare and other things we rely on. Here's the twist. Central banks can step in to rescue the situation by purchasing government bonds. But there's a lurking threat called inflation. When more money enters the system, prices can soar, and if they get out of control, central banks may need to raise interest rates to keep things in check. The catch here is that the high interest rates can make borrowing more challenging. even for those looking to buy a home or a fancy car. Wealth disparities and their impact during crises are great concerns. Currently, we're facing a severe banking issue, one of the most serious since the 2008 financial crisis. Here's the situation. Banks are losing a lot of money on government bonds, mainly due to aggressive increases in interest rates. Just imagine, these bonds are supposed to be ultra-safe investments, but they're causing so much loss for the banks. These losses are making some banks unstable and vulnerable. So why does this matter for regular people? Well, it all ties back to wealth inequality. There's a big gap between the wealthy and the rest of us. While overall household wealth is decreasing, the poorest 20% of households have seen a slight increase in their wealth from 2021 to 2022. In contrast, the wealthiest individuals have lost a huge portion of their wealth. This is unexpected because usually the top 1% hold the majority of the wealth. Meanwhile, those at the bottom have only a small share, and even though it's slightly growing, it's still a tiny piece compared to the large chunk owned by the wealthiest. Real estate plays a main role in wealth. It's not just about owning a home, it's an important asset that influences overall wealth. If housing prices drop, people might feel less financially secure and spend less money. This can set off a chain reaction that affects the economy. Also, when it comes to jobs, if banks are struggling, they might become more cautious about lending money. This means individuals and businesses may face challenges in getting loans, which could lead to fewer job opportunities. When banks are more willing to lend, companies can expand and hire more people. So the health of banks has a direct impact on job prospects for everyone. But that's not only it. When big banks are in trouble, Robert Kiyosaki has some interesting ideas. He points to the US central bank as both the cause of the problems and a way to fix them. He's worried that the bond market, which affects your retirement savings and pensions, is in trouble, and this crisis might just be getting started. So what's his plan for staying safe in this financial storm? Well, he's got two tricks. Precious metals. Kiyosaki really likes gold and silver. He thinks that they can help you when prices are going up and things are uncertain. These metals can't be made by the government whenever they want, unlike regular money. He especially likes silver because it's used in things like solar panels and electric cars, and there might not be enough of it in the future. He also says that the government is doing things that might make prices go up, which is good for gold and silver. Cryptocurrency. Kiyosaki is also looking at cryptocurrencies like Bitcoin. He calls Bitcoin the new gold. Bitcoin has had some ups and downs, but it's shown that it can bounce back. He suggests you consider a mix of investments, including gold, silver, and Bitcoin. Just be careful about high fees on some websites where you can buy Bitcoin. In simple terms, Kiyosaki's plan involves buying precious metals like gold and silver because they can protect your money when things get crazy. He also thinks Bitcoin is worth looking into because it's like a new kind of valuable asset. His advice is to have a mix of these investments to keep your money safe. Kiyosaki is a bit different from the usual stock market enthusiasts, but he still has some favorites in that area. However, he's giving traditional banks a bit of a nod. He recognizes that they're facing challenges as technology and digital currencies change the game. Regular banks are stable and offer the safety net of FDIC insurance. But with the recent problems, some banks have shown that relying solely on them might not be the wisest choice. Now, what is infinite banking? Think of it as having your own personal bank with your rules. Here's how it works, step by step. Fractional reserve banking woes. Some banks recently faced trouble due to bad deals, poor management, and the concept of fractional reserve banking. They only keep a portion of the money you deposit and lend the rest. When too many people want their money back at once, things get shaky. People think it's readily available, but it's not. Infinite banking. Imagine you're selling lemonade and people pay you for it. What if you could also lend them money to buy your lemonade? That's what banks do, and they make extra money doing it. Infinite banking is like becoming the boss of your own bank. You use special insurance to create your cash reserve, and you can borrow from it whenever you want. It's like having a secret wallet that you can use anytime you need some extra cash. Extra safety for your money. While FDIC-covered banks are good, infinite banking takes things a step further. It uses insurance plans to keep your money safe from any issues that traditional banks might face. Insurance companies have to set aside extra cash to ensure safety. Here's how it works. You put $100,000 into an insurance plan, and that becomes your cash reserve. You can borrow from it whenever you need, and your projects can even earn you some extra income. Before infinite banking, we used to invest in real estate. We connected private money lenders with real estate investors to fund their projects. One of these private money lenders provided us a loan from his insurance policy. This investment was linked to real estate but used the concept of infinite banking. The payments we made to him funded his insurance policies. In simple terms, here's the plan. Get a specific insurance policy to grow your money over time. You put your money into it and it grows. When you need it, it's there, like having a secret savings account that isn't tied to regular banks. I hope I've been able to help you in your decision-making process. Ultimately, the decision is entirely yours. What are your thoughts on this? Feel free to share your thoughts in the comments below. For more informative videos like this one, you can find them right here. See you in the next video.